Are you ready to take your investment game to the next level? Well, you're in the right place because today we're going to unravel the secrets behind successful investing. But before we dive into the core of today's video, here's a question that can determine your financial future. Do you know the 6 fundamental rules that can make or break your investments? Are you following them diligently? If you're uncertain, don't worry. Whether you're an experienced investor or just starting your journey, understanding and mastering these 6 rules can transform your financial life. Today, we're going to explain these rules, break them down, and show you how to apply them to your own investment strategy. So, grab your notepad, get comfortable, and get ready to take notes because the path to wealth begins with knowledge. Let's get started. Number 1. The role of financial education. In an era where financial decisions impact every aspect of our lives, understanding the role of financial education has never been more critical. But before we get started, let's consider this. Why is financial education so vital in today's world? Well, my friends, the answer is simple. Financial education empowers you to make informed decisions about your money. It's the key to unlocking financial freedom, securing your future, and achieving your dreams. Now, let's discuss the elephant in the room, the shortcomings of traditional education when it comes to financial literacy. In our traditional education system, you might learn algebra, history, or Shakespeare, but often there's a significant gap when it comes to practical financial knowledge. Think about how many times did your school teach you about budgeting, investing, or managing debt? For most of us, the answer is not enough. This deficiency leaves many individuals ill-equipped to navigate the complex financial landscape we face today. It's like sending someone into a maze blindfolded and expecting them to find their way out. But let's shift gears and talk about the positive side of this equation. Let me share some real-life success stories of individuals who embrace financial education. Thomas Rowe Price Jr., often referred to as the father of growth investing. Price's life and investment philosophy have left an indelible mark on the financial world. Thomas Rowe Price Jr. was not born with a silver spoon in his mouth. In fact, he grew up during one of the most challenging times in American history, the Great Depression. This tumultuous period profoundly influenced his perspective on investing. Instead of avoiding the stock market due to the economic turmoil, Price chose a different path. He embraced it, believing that financial markets operated in cycles and that there were opportunities even during challenging times. One of the most intriguing aspects of Thomas Rowe Price Jr.'s approach to investing was his contrarian nature. At a time when most investors were looking for quick gains, he advocated a different strategy. For Price, discipline, process, consistency, and fundamental research were the cornerstones of successful investing. He believed that investors should focus on individual stock picking with a long-term perspective. The legacy of Thomas Rowe Price Jr. lives on through the company that bears his name, T. Rowe Price. Founded on his principles, the firm has become a globally recognized leader in investments, mutual funds, and brokerage services. Today, T. Rowe Price continues to uphold the values and principles set by its founder, offering investors opportunities for long-term growth and financial stability. So, my friends, the role of financial education is undeniable. It's the bridge between financial struggle and financial success. It empowers you to make confident, informed choices, and it's never too late to start your financial education journey. Number 2. Leveraging debt for wealth. Let's start with the basics. Leveraging debt for wealth means using borrowed funds as a tool to invest in income-generating assets or opportunities that have the potential to yield a higher return than the cost of the borrowed money. Imagine you have the chance to purchase an investment property with a mortgage. The rental income generated from that property exceeds the cost of the mortgage, leaving you with a profit. This is a classic example of how leveraging debt can lead to wealth creation. Now, let's explore how some well-known figures have successfully employed this strategy. One notable figure who has effectively used debt for wealth creation is former President Donald Trump. President Trump is a prime example of how leveraging debt can finance large-scale real estate ventures and business acquisitions, ultimately contributing to his impressive net worth. But it's not just limited to President Trump. Many successful entrepreneurs entrepreneurs, investors, and business leaders have strategically employed debt to fund their ventures and grow their wealth exponentially. From Warren Buffett's acquisition of companies using borrowed funds to Elon Musk's leveraging of debt to fund SpaceX, these individuals have harnessed the power of leverage to reach their financial goals. Number 3. Understanding types of income. First things first, let's define the 3 main types of income you'll encounter on your financial path. Number 1. Earned income. This is the money you receive in exchange for your labor or services. It's your salary, wages, bonuses, and even the income from your side hustle. Next up, portfolio income. This includes the money you make from your investments like stocks, bonds, and real estate. It's the dividends, interest, and capital gains you earn from your financial assets. Finally, we have passive income. This is the golden ticket, folks. Passive income flows in with minimal effort on your part. Think rental income, royalties, or income from a well-managed business that doesn't require your daily involvement. Now let's talk taxes and how they impact your wealth accumulation based on the type of income you earn. Earned income is typically taxed at the highest rates, which can significantly eat into your paycheck. However, there are ways to reduce your tax liability through deductions and credits. Portfolio income enjoys some tax advantages. Capital gains, for example, may be taxed at a lower rate if you hold investments for the long term. Plus, you have more control over when you realize those gains. Now, here's where it gets interesting. Passive income often enjoys favorable tax treatment. Rental income, for instance, can benefit from deductions, and some forms of passive income may even be tax-free. So why is passive income the ultimate wealth-building tool? First, it can provide a consistent stream of income that's not tied to your daily grind. This means you can earn money while you sleep, travel, or pursue your passions. Second, passive income can help diversify your income streams, making your financial situation more robust and less vulnerable to economic downturns. Finally, passive income is a key ingredient in achieving financial freedom. It can allow you to break free from the 9-to-5 grind and live life on your terms. Understanding the 3 types of income and their tax implications is crucial on your journey to financial success. While earned and portfolio income have their place, don't underestimate the power of passive income in building lasting wealth. Number 4. Risk assessment and financial intelligence. Let's kick things off by talking about why self-assessment is the foundation of managing financial risk effectively. Imagine embarking on a cross-country road trip without a map or GPS. Sounds risky, right? While managing your finances without self-assessment is no different. You need to understand your financial landscape, your goals, your risk tolerance, and your current financial health. Self-assessment allows you to identify potential risks like overspending, inadequate savings, or heavy debt, and develop strategies to mitigate them. It's like putting on armor before entering the financial battlefield. Now that we've stressed the importance of self-assessment, let's talk about the next step: seeking financial education and mentorship. Gaining financial intelligence isn't just about assessing risk, it's about knowing how to navigate those risks. There's a wealth of information out there, from books and online courses to financial experts and mentors who can guide you. Education empowers you to make informed decisions, whether it's about investing, budgeting, or planning for retirement, and having a mentor can provide invaluable insights and accountability on your financial journey. Number 5. The cash flow game and financial statements. First, let's talk about the cash flow game. Developed by the legendary Robert Kiyosaki, this board game isn't just fun. It's a practical tool for understanding financial concepts. The game simulates real-life financial situations, teaching you about income, expenses, assets, and liabilities. It's like a financial bootcamp that prepares you for the real world of money. Playing the cash flow game helps you make the connection between financial decisions and their consequences, and it's a fantastic way to start your financial education journey. Now let's shift gears and talk about financial statements, specifically the income statement and the balance sheet. These documents are the financial compass of your life. The income statement reveals how much money you make and where it goes. It shows whether you're operating at a profit or loss. Think of it as your financial GPS, helping you navigate your financial journey. The balance sheet, on the other hand, reflects your financial health. It tells you what you own, which are the assets, and what you owe, which are liabilities. The difference between the two is your net worth. Now, here's the game-changing shifts in mindsets that the cash flow game and financial statements can instill in you. Traditionally, we've been conditioned to focus solely on income, working hard for that paycheck, but the rich think differently. They prioritize asset acquisition. Assets are things that put money in your pocket: real estate, stocks, businesses, and more. The goal is to acquire income-producing assets that can cover your expenses and then some. This shift in focus from income to assets is what can ultimately lead to financial freedom and security. And finally, number 6, overcoming financial barriers. Now let's talk about strategies to break free from the "I can't afford it" mindset and raise the capital you need. First, consider the power of side hustles. Whether it's freelancing, selling products online, or offering services, a side hustle can bring in extra income that can be channeled toward your goals. Next, explore the world of crowdfunding and peer-to-peer lending. These platforms can connect you with investors and lenders who believe in your vision. Don't forget about leveraging your assets. Your home, investments, or even your skills can be turned into sources of capital. Knowledge is your greatest asset. Educate yourself about personal finance, investing, and wealth building. Read books, take courses, and follow experts in the field. And never underestimate the value of mentorship. A financial mentor can provide guidance, support, and accountability on your journey. There you have it, folks! You're well on your way to mastering the 6 basic rules of investing. We hope this video has equipped you with the knowledge and confidence you need to make smart investment decisions. Remember, investing is a journey, not a destination. Keep these rules in mind as your trusted guide, and don't forget to stay informed, diversify your portfolio, and always invest for the long term. If you found this video helpful, please give it a thumbs up and consider subscribing for more valuable insights on mastering your finances and achieving your investment goals. Thank you for joining us today. Check out more videos about what is hedging and trading versus investing and know the difference. These videos will dive deep into the world of stocks, sharing tips and tricks, and everything you need to know to become a successful stock market investor. Until next time, see you on the next video.